Hello, friends. My name is Deepak, and with me is none other than Sanjiv Gupta, CPA. So, Sanjiv ji has been practicing tax and accounting here in Bay Area for last several years. He has seen the dot-com crash. He has seen a lot of other issues that we all have ran through, and now we are dealing with this pandemic.
COVID-19.
COVID-19, as we all know it. So, Sanjeev ji, last time you and me talked about individuals. We talked about what benefits are available to regular consumers during this time. But today, I want to talk to you a little bit about small business owners, people who own gas stations, people who own real estate business, people who are doing other small businesses, especially in our Bay Area community here. What benefits are available to these people? That's what I want to focus on today.
Okay. Yes, definitely. Let's go. There are a lot of things that impact the small business. So let's start with the tax benefits.
Okay.
I think the first thing is the tax benefit. The CARES Act has been very instrumental in changing the area for small business owners. Under the CARES Act, for small business owners, you can do a lot of things. Now, first thing is first, you can do a deferment for employment taxes, the employer portion of Social Security taxes. Everyone knows 6.2% of the Social Security and Medicare tax, Social Security tax, you can defer it. You have to pay, employer has to pay for 6.2%. Now you can defer that 6.2% and make the payment in two installments, 50% by 2021 and 50% by 2022. So for the payroll that you run from March 27th, 2019 or 2020 to December 31st, 2020, this employer portion Social Security tax can be deferred in this way. So you don't have to pay the employer portion only of Social Security taxes. You can defer it into installment like this. The employee portion definitely has to be paid. Social Security and Medicare tax. Now, employer portion of Medicare tax still have to be paid. The employer portion of Medicare tax is 1.45% of the payroll amount. Of course, there's no there's no income limit for Medicare tax. There's income limit for Social Security taxes to be taken out. That's the first thing is deferment of employer taxes. Second is the employee retention credit. It's a very important provision which is given under the CARES Act. If your business is suffering losses, means your receipt, your total gross sales is coming down 50% in any quarter of this year as compared to last year, same quarter is coming down by 50%, and then you can retain, you can get a credit equal to wages paid up to $10,000. Whatever wages you pay to a employee up to $10,000, and you're suffering that lowering of revenue of like up to 50%, then you can defer those employment taxes. Again, that's employment taxes is again employer portion of Social Security taxes. That's deferment. That's you can take a credit for that the taxes, the employer portion of Social Security taxes. You can take a credit up to $10,000, and you don't have to pay those taxes on 941. You can take the credit and you can use it against subsequent payroll tax payment. I just want to give an example. For example, 941, you file a form 941 for the quarter, well, let's say quarter two, and employer portion of Social Security taxes comes to, let's say, $8,000, and you have a liability to pay $10,000. So you can get a credit of 8,000 up to 10,000 per employee wages. You can get $8,000, 100% of that one, and you can apply that 8,000 against $10,000. So you don't have to pay 10,000. You can use that $8,000 which you paid to the employee.
Sanjiji, I just want to clarify. So you're talking about credit on the taxes, or it's actual check these businesses get in mail?
Yes, so it's a credit on the employer employment tax returns. For example, 941. So you don't have to pay those taxes front. So it's also a kind of a payment to you, right?
Okay, so that's nice.
That's
That
nice.
helps.
That's a payment to you. But again, the condition to get those credit is based upon the decline in the gross receipt. 50% decline from this quarter to prior year quarter, same quarter, or third quarter or fourth quarter. So decline has to be by 50%. If it's less than 50%, then you can't claim this employee retention credit.
Now, this when you say quarter, is there like a specific? Are we talking about, like, for example, January to March, or you
No,
kind of sort of?
from the date it happened, like second quarter, third quarter, and fourth quarter, not first quarter.
Okay, but you, like, I guess what I'm trying to figure out, when we say quarter, are we talking about any 3 months, or is it like, no, from April, May, and June,
No,
July,
it's
August?
two specific months in a particular quarter, like second April, May, June, or July, August, September. You can't mix and match
So
any
any
months.
quarter, any 3 months period, you have
Continuous,
50% or more decline in your revenue,
right?
then you can get up to $10,000 credit that you can offset against the taxes paid,
Employment taxes.
employment taxes paid, but you will not get the money back. Am I correct?
No, you can claim the credit, right, against those taxes. Means you don't have to pay those taxes. So let's say your employment taxes comes to $10,000,
Right?
right? And your the credit comes to $12,000. So there is $2,000 extra. You can claim the $2,000 in subsequent filings.
So then the next
Yeah, you can
quarter.
carry forward the subsequent
Okay,
filings.
makes sense.
So that's the employee retention credit. Then the third one is that for small business owners, which they have given is net operating losses. So if you have suffering loss in your business, let's say you suffer losses in 2018, uh, or you suffer losses in 2019, you can use that loss and carry it back 5 years. So let's say you have a loss in 2018, you can carry it back 5 years. So you can carry back to 17, 16, 15, 14. So carry those to 5 years. And in any of those years, if you paid any taxes, you made a lot of money in any of those years, paid taxes, you can amend those years' return and get the refund of the taxes. So you can use that loss from that business to set off the tax income of any prior year 5 year returns. So 2020, if you're making losses, you can carry back 5 years. And let's say 2019 was a good year, 2020 is a bad year because of COVID-19. You can use that if you are having loss in 2020, you can use that loss to set off your 2019 tax return. One way to do that is you can amend 2019 return, or you can use a form which we use for claiming that loss 3115. You can use that form to claim that losses in 2020 tax return. So you can do either way, whichever way is suitable. I will suggest amending the return is particularly better. So that's net operating losses is very important technique. You can carry it back 5 years, or you can carry forward 2 years. So you can that's another provision which is allowed under the CARES Act. The another important provision for under the CARES Act is about the losses suffered by S corporations, pass-through entities, S corp LLCs. So if earlier what happens with the Tax Cuts and Jobs Act, any losses that is coming from S corporation or LLCs were restricted to $500,000. It means if you have losses, let's say more than 500K, let's say $510,000, you can use only up to $500,000 and use that loss against any other income like W2 income, interest income, or dividend income, or any other income. But now what they've done with this CARES Act, they have the entire $510,000 you can use it against any other income on your personal tax return. As everyone knows, the past two entities, the K1 comes from the S corporation LLCs and it goes to your personal return, and you can use the loss to set up other income. So there's no limitation of $500,000 is gone. If what a loss you have from the S corporation, even is $1 million, you can use that loss to set up your W2 income. And if that income is still less, you can carry forward that loss. It becomes not net operating loss on your 1040. You can carry forward to subsequent years. So that $500,000 loss is taken out. That's an important change for the business owners. Now you have to understand one more thing here. For claiming that loss, you should have a basis in the S corporation, because everybody knows that if you don't have a basis in the S corporation, then you can't claim this loss, even if it exceeds $500,000 loss. What about LLCs? There's no basis worksheet so important as in case of S corporation, because in case of LLCs, the loan given by third party is counted as your basis. In case of S corporation, loan given by the shareholders is counted in the basis, not loan given by the third parties. So very big distinction there. Uh, and another change for real estate investors, big change for real estate investors, is qualified improvements, which has happened under the CARES Act. As we know, President Trump is all real estate uh, guy investors. So big jump for all the real estate deals. So if you do any qualified improvements inside a building, temporary improvement, not permanent improvements. If you do any improvement in last, let's say from 2018-19, if you do any improvement in those buildings inside the building, not to the structure of the building, and is temporary, not permanent. Any improvement that you do to those, any expenditure related to those improvement, you can set off 100% as a bonus depreciation. Now, what happened with the Tax Cuts and Jobs Act, which was passed on December 15, 2017, which was applicable for 2018 tax years and moving forward? and this qualified improvement was shifted from class life of 15 years to 39 years. Thereby, we cannot give the bonus depreciation. Now, this CARES Act, this provision, the CARES Act, has overlooked that provision under Tax Cuts and Jobs Act. Now, with this provision, they have shifted the life from 39 years to 15 years. Now, you can give bonus depreciation. So, if you have a client, or if any of real estate investors have commercial buildings, or any other investment, like a dentist have a commercial spot, or you're running a business having a building as an asset inside that, for that business, and you do improvement, you can do 100% depreciation. So let's say you made 100,000 as a qualified improvement, and you had a profit of 200K for that year. You can take 100% of $100,000 and set up from that income of 200K. So the profit comes down to 100,000. So big change about this one is a qualified improvement, and which has, and if you've not taken bonus depreciation in 2018 or 2019, you can amend those years returns and get that refund. So these are very fantastic provisions which business owners should use it. Of course, the CPAs are you need to know and be knowledgeable in this area. Definitely talk to your CPAs professional. Make sure that you do take advantage of these provisions.
So, Sanjeevji, my next question to you is: there's a lot of noise right now about something called PPP program. I guess it's designed to really help people stay employed, so we don't really have tremendous unemployment, which, by the way, is already at 30 million people, I think, as we speak today. So
Right.
I don't know how much is that program really helping, but maybe you can tell our audience a little bit about this program, that maybe people haven't applied for it. If they have applied for it, what should they expect? So maybe give us a little bit more details into that program.
Yes. So PPP program for full definition is a paycheck protection program. Like you rightly said, is a program meant for uh, hiring back those people who have applied for unemployment, or keeping the existing employees on payroll. So that was the main intention behind this program, PPP program. It was meant for small business owners to take that money from, as they have to apply to the SBA through their lending institutions, where they have a borrowing relationship, or they have an existing banking relationship. If they have a borrowing relationship, they are in the front of the queue. If they have bank relationship, it's not so in the back, but of course they can still apply. So first funding happened on April 3rd when it was launched. Very haphazard manner. The guidelines were not very clear. SBA did a very bad job in terms of guidelines, because the program was just thrown on them by the government without any proper insight into the forms, the instructions to the lending institutions. And because of that haphazard manner, it was done. Lot of banks were not able to accept applications on time. In fact, the people who are the small business owners who were applying for those loans, they were not very sure how to apply and what to put on those those applications. They don't even know where to get those documents, like 941s, which line to look for. Uh, so you have to do all those calculations. Their CP, they have to connect with their CPAs. CPAs also were not very sure how to depict all those, because language was not very clear that time. So, but fantastically, it went through all this. 349 billion dollars was the installment done, first installment, which was claimed in, I think it was done in 5 6 days. It was gone through in first few days. SBA website was not accepting applications, but there were clients who got money, and there were big clients who got a lot of money. Public sector companies got a lot of money. We are hearing in the news that big companies, they were again now giving. Lakers is one of the company who gave the money back, $4.6 billion. They got the money. There are other big chain public companies who got the money, and they are returning the money back, because the guidelines were such in a haphazard manner. There was not, if you have employees less than 500 plus, and you're a small business, and the guidelines was like that, you can apply for PPP loan. Now the recent second installment has come in. It was passed, I think, last Thursday, on April 25th or 26th, and now there is another installment of $310 billion. Now this extra guidelines are coming in from SBA, for small business, they have to really be careful to certify that the current economic situation requires them to apply for this PPP loans, and they have no source other than this PPP loan to keep them afloat. So that's additional documentation they need, a certification. They may want to make sure that the companies do, when they apply, they do certify that one. And that's additional documentation. But if you have an employee less than five, if the number of employees are less than 500, and if you're running payroll and you're not laid your workers off, you can do a computation under the PP for the PP program. You to compute the payroll cost, which is equal to taking your 2019 form 940 amount, or you can look at nine number seven Medicare wages on each quarter of 941. Uh, uh, Take that number for each quarter, and you have to take the any compensation for employee about 100,000 minus that one, and then you add back all the employer contributions to retirement plans and medical benefit. That number divided by 12 will be giving a monthly payroll. That times 12.5 was the amount you can claim on that form, and attach all the documents which happened with which a lot of people are aware of it.
So, Sanjeevji, thank you so much. You have shared a lot of great information about various programs that is available to small business owners. Now, my question to you is, how is all this going to play into the tax returns?
Right.
You know, is a lot of this stuff tax free, or would businesses will be liable? I mean, some of these people might have 200, $300,000 of expenses. I mean, how is it all going to play out
That's a
in a big
very
picture?
that's a very good question, by the way. A lot of people are confused, and we are still waiting for guidelines from SPA and IRS. Now we are looking at two entities. One is IRS for the tax implications, and we are looking for SPA relating to the computations of loan forgiveness, how that is going to work. As of now, what we know is when you get a loan for PPP, when a small business get a loan for PPP, the employee retention credit is no longer applicable to them. Even if they have a drop in revenue, 50%, like we talked about earlier, they cannot claim the employee retention credit because they got this PPP loan. You cannot double dip it. Now, if what about the deferment of employer portion of social security taxes, which we talked earlier too? So they can do the deferment of employer portion of social security taxes till the date of loan forgiveness. So if for payroll run between March 27 to December 31st, like we talked about, you can do a deferment of employer portion of social security taxes. When you get the PPP loan, till the date of forgiveness, till the lender decide to give you forgiveness, till that date, whatever deferment you have done for employer portion social security taxes, you can do that. After that, it's not allowed because loan forgiveness has been done. If the loan forgiveness is not done, then you can still continue to get the deferment of employer portion of social security taxes. So that's one. That's the second impact of this one, PPP loan. Now, PPP loan forgiveness is not considered a taxable event, so there's no tax on that forgiveness. So it's treated as a grant. Now, what happens to those expenses? The payroll cost, the payroll 75% payroll cost, 25% of rent, utilities, mortgage payments. What about those expenses? So right now we don't have anything from the SPA on those, whether you will claim those expenses again on your tax return when that loan forgiveness is given, because as per the IRS code, which we know, which we are using it, you cannot deduct any expenses relating to a tax exempt or tax free income. Now, loan forgiveness is like a tax exempt, tax free income is like a grant. So, what about the expenses other than that? Like I said, it's as per the IRS code, it should not be there, but we're still waiting for guidelines from the IRS and the SPA. The program says you can claim those expenses. We have to wait for more clarification from the IRS.
Now, Sanjeevji, before I let you go, what advice do you have for those who are actually in business today? What should they be doing right now? What should they prepare for?
It's a very good question. So one thing we have to talk about is that the tax filing deadline, which is coming up from so April 15, everything is shifted to July 15th. So if you have PPP loan, I will suggest them to extend that extension. They can file the extension form 7004 for S corporation LLCs, because July 15th is still very nearby. 8 weeks period will just like end on June 30th or whatever their date of disbursement is. So it will very less time to to do work for last year. It's better to take an extension. You can get another 2 months of extension, September 15, October 15 deadline, but you have to file the extension form. You don't have to. Yeah, of course, if you owe any taxes, you have to make the payment by July 15th, because they are not the extension is for filing the return, not for extension for payment. They already extended the payment from April 15th to July 15th. So that's important from a tax filing point of view, just to make sure that people do understand those things.
All right. Is there any special kind of record keeping, any kind of books that they should worry about right now? Because a lot of them are not in offices right now, right?
Right.
So,
So for small business, I would suggest them to, like I said, to extend those tax filings and keep proper documentation. Now, use the technology. I'm also trying to use technology to the best possible way. You can use cloud for doing all those the storage of documents. Uh, of course, you have to keep the right document. Make sure the accountant work with your accountant. If you have QuickBooks, you can use the QuickBooks for that loan amount. You can create a separate QuickBooks file, and you can name it as CARES PPP loan uh, disbursement, or whatever you can name it, that file, and track it, and make sure that you all the checks, receipts, and everything as closely as possible. You have to keep those documents with you.
all right, guys, thank you so much for being with us today. And Sanjeevji, thank you so much for your time. I know there's a lot going on right now. I'm sure there are clients probably just calling you, hey, how do I do this? How do I
We
do
have been
that?
on the phone for last several weeks.
Right? So, those of you guys who are just not sure how the program works, or if you have a question, you need help in doing some calculations. I know there's a lot of math involved in figuring out a bunch of number. I'm assuming you guys are still accepting clients and being able to help them over the phone.
Yes, yes. We are all my offices are closed, but we are working virtually from homes. All my staff members are working from home, and they're all available. And like I said, we helped a lot of the business client to apply for PPP loans, and we have been very instrumental in getting those loans for our clients. So if you have any questions on those loans, or you want to apply for loan forgiveness, of course, our team members can help them.
All right. Thank you so much, Sanjeevji, for being with us. Really appreciate it, and stay safe.
Thank you.
All right. Bye bye.